Hey traders, this is Jeff with ZenTrader.ca. It's a really late here, but I wanted to get something up here, talk about today's big move, big 4% move in the indexes. Quite a rally. My thoughts on it in a nutshell is that it's enough to get me to start buying some long positions, maybe late Thursday, maybe Friday on a pullback. But the move isn't enough to get me to want to cover the shorts that I have. So, yeah, if that makes sense, I think that picking a side right now is going to be a little bit difficult. So, my signal here got bearish here beginning of November, had a nice move down. I spoke last week when the 4-day EMA was below the lower Keltner channel that we could start to anticipate a bounce. At that point in time, I don't need to say take some money off the table. You just need to know that if you don't, then you're being greedy. So right now, had you done that, worst case scenario, if today's rally made you nervous, you could have sold, which would have been right about when my timing signal went bearish. So at least you would have made money on half of your stake versus giving back all of your gains. That's fundamentally how I look at trading all of the time, in terms of, I always want to be taking some money off the table, because psychologically it can wreck you if you give back all your gains, and we are a product of our last 3 trades. So you always want to have a positive mindset. You always don't double positive, double negative. You don't want to let one trade have a negative effect on your future trades. With that being said, let me go back to what I had said about. I don't think it's. I think we're entering a period where it's going to be, you're going to want to hedge. You're going to want to play both sides of the trade. My signal hasn't gone bullish yet. It's close, but I need to see a little bit of a pullback. I need to see how the market handles the pullback before I can give an all clear signal to kind of get long, kind of get rid of the shorts. So right now I'm going to hold my shorts, and I'm going to look for late Thursday, maybe Friday, for a pullback to maybe add some options. So I'm going to play, for example, I hold FXI right now, I hold GLD. I'll probably hedge those using options. So I'm short gold, so I'll probably buy some long calls in GLD to hedge that position, because I don't know right now, and I don't want to sell out of my shorts or cover my shorts and then get fully long and then see tomorrow a big down day. I think that if you came into the market flat today and you saw this big rally and you thought, okay, I'm gonna, this is it, this is the confirmation that I need, and you got big long in a big way, and then you saw a big down day tomorrow, well, that could be enough to shake you out of your position. So I think that we're entering a period right now, especially with the holiday season coming, that you're going to want to play both sides of the trade. And then one thing that I want to talk about as to why the market could be rallying, I don't really talk a whole lot about whys, and I don't speculate, but I have a theory, and I'm just going to put this out there, and I'd like to hear your comments and on the blog. I have 2 reasons why I think the market could potentially rally this month. Number 1, I think China is buying blue chip stocks instead of putting their money in U.S. bonds. I think that they recognize they're going to get a better return on equity by buying U.S. stocks than bonds. That's number 1. Number 2, I think there's a stealth QE3 going on right now, because I think the U.S. government recognizes that they can get more bang for their buck if they do this during the month of December, when it doesn't take as much volume to move the markets. There's my conspiracy theory for the evening. Let me hear your thoughts on if you think those are even, if they even make sense. But, sometimes I let my mind wander as to the whys behind the technical moves. And those are my 2 thoughts for the evening. So take care, guys. Talk to you later.